Good morning, everyone. How's everybody doing this morning? Hey, Raj. How you doing, brother? Evan, what's going on? Hey, Moran. Raj, Jonathan. What's up, Mr. C? How you doing? Yoder. Good day from North Dakota. I know North Dakota well. Minot? Bunch of my buddies went to Minot State. I grew up right above there. Grand Forks. Nice people. It's been a long time since I've been there. So, folks, here we go again. I gotta apologize. It's been a crappy week for me. I've been having fevers and getting sick and coughing, so the sessions have been kind of short. We'll do our execution lab next week. I'm just coughing a lot. Today I'll try and do the full hour and a half, but most probably I'm going to get through about an hour. So we'll get you guys set up. Make sure you know what you're looking for. And let's see. All right. Our overnight inventory is very long. Very, very long. Hey, Ronan, Ed, how you doing? Randy, how's it going? Good morning. So how do we look at inventory? We look at the close, and then we go and look at, is the majority of the trading above the close or below the close? So it's long. It's long, it's gap long, which means if we were to open right now at 7,001, um, we'd be opening on a gap. Now we're opening outside yesterday's range if we were to open here. Now, this is the kind of gap that interests me. I don't really care about gaps. You know, if we close here and open here or open here within range, I don't really care about those so much because they're just, the opening auction kind of thing. But when you open outside the previous day's range, up or down, that means that there is a change in business, okay? There is a material change, okay? A gap outside is a material change. That means it's not business as usual. You know, yesterday you could buy between 69.23 and 69.80, right? Today, if you want to buy it, you got to pay 7,000, right? Actually, that's actually completely wrong, Ed. We have gaps from back in COVID that have not failed, that have not filled. Maybe in 30 years they will. Yep. So the moral of that story is don't just blindly short a gap. Okay? Yeah, eventually. Eventually is a long eventually is a long time, right? I mean, people who were shorting in the post-COVID run-up, there's a lot of people who lost a lot of money. There was a very famous fund manager who took his fund from $3 billion down to 400 million, and you know, kept saying all gaps fill. So that is the kind of bad information that we try and keep you away from in the trading syndicate. Which, by the way, before I start, are Steve's running a special for new people again. So if you sign up, use the code new member and you will get a hell of a deal. You'll get okay. Yeah. So we're going to open out a gap. The shorts are trapped. Well, let's go through the time frame of where the shorts are trapped, okay? The first set of the oldest shorts are trapped underneath 69.50. That's where the overnight low is. The next set of shorts are trapped under 69.65. The next set of shorts are trapped under 69.80. And then I would say 69.93. Now, if the market, there's a 70% chance, according to the stats, 60 to 70% that we will correct inventory lower, right? Yeah, it's not guaranteed. Nothing in this business is guaranteed. It's not, unfortunately, it's not like a normal, you have to have some sort of situational awareness. That's why a lot of people who just trade blindly lose money because they have a set of rules that aren't based on reality. Your trading rules have to be based on reality. Otherwise, you're going to lose all your money. It's simple as that. So 70% of the time, we get a move down to correct inventory, right? No, not for existing members. That is for new, you know, he's running a bit of a sale to bring in some new blood. Okay, so we have this move down. Right now, it doesn't seem to be happening. Now, why is that? Well, a couple of days ago, I started to tell people why this is happening. The thing is, folks, we're in an uptrend, and it's a brand new year. So I know everybody really wants the market to go to 1800. I don't know why. But we get a liquidation, and then you get this B profile, and then you get a move up to distribute, and then you get a B profile. Then you get a move up to distribute, and then you get a consolidation profile, a move up to distribute, and then you get a B profile, and then another move up. So in an uptrend, right? Right? In an uptrend, when the market pulls back, people consider that a bargain and they buy it. Get it? So that's what happened again yesterday. We had a liquidation. We did not take out 69.23. We stayed above the cost basis before this move higher. And there you have it, right? And now we're trading 7,000 again. Now, that is something that is very common in a new stock when you take a stock public and you start retailing it out and you own all the stock, so you start distributing. This market trades almost like a new stock. There's not a lot of inventory that is available with a lower cost basis for sale. The larger markets themselves, like Apple and the large stocks, those stocks are hoarded, basically. The floats are hoarded, right? Uh, he just said new member. So I'll tell him. I'll tell him to get out. We'll get that sorted. Okay. Oh. If I pause, if I go on mute, it's because I'm either coughing or I'm getting a bit of a rapid heartbeat. Yesterday, I took a little too much cold medication to try and be, and because I had to do a couple of things, and I ended up getting a rapid heartbeat. That was not good. Try to avoid that today. So we're probably gonna just do an hour. Let's get you guys settled and set up. One sec. Steve will get a new one. Alrighty. So here we go. Our overnight high is just shy of 7,004 where that stop was. Uh, and I've got our levels. My cost basis this morning was 69.56 to 69.60. And I doubled it to 68, doubled it again to 84, doubled it to 7,016. Aloha, Kenneth. Welcome to our podcast. We have a few Hawaiians in our room. And I myself lived in Oahu, on Oahu in 1980, 85, 80, no, 86, 87. So welcome. In this scenario, when we open on a gap, I got to look for a seller. To go long, and this is why, do you guys know what a cost basis is? So when you have a cost basis, you sell it for 2 times profit, 4 times profit, and 8 times profit. So do I really want to buy a product at 8 times profit? Right? Now, so that leaves you with kind of looking for a short. Now, the problem with shorting is there needs to be a seller. So we need to identify where the sellers are. Right now, we can see that there's a seller here. And they've lowered their offer from here to here to here to here. Now, does that constitute a trade for me? Not right now, because I'm not short at 7,002. If I was short 7,002, I'd have my stop at 3, and I'd put some buy orders just under 7,000 to see if they got hit. Now, that's not the greatest trade in the world. So what I tend to do when a market gaps up, inventory's long, we're gap higher. I'll look for some scalp shorts off the open. Right? There's usually sellers around large round numbers like 7,000, but we've already gone through and done that trade, right? We've already gone through 7,000 a couple of times. Okay, for the code, try live 50. Oh, thanks for watching the podcast. We appreciate it. So do you see how it kind of dipped under 7,000 just for under a minute and then popped right back up? The market is in pure distribution right now. So what they're doing is they're taking the inventory that we picked up on this liquidation and they're distributing it up here. There are multiple short positions that are holding the market higher and they are providing the bid so we can sell at a higher price. The wholesalers can, right? Remember, this is a wholesale business. We are retail traders. So we'd like to base our business decisions on what the wholesalers are doing. So you can see that they're selling here and they stop selling here. Do you guys get this? So here's where they're initiating the selling and here is where they're stopping. You guys get that? Make sense? Yes? No? Maybe? Thanks, Dave. Someone's awake. Just checking. All right. Cool. Now that is information you can actually use when you're trading. It's better than any formation or indicator because if you know where they're selling and where they stop selling, guess what? Where they stop selling, that's where the buyers are. It's really that simple. So the market will find the buyers for you. You don't have to do it. It's funny. Somebody messaged me and said, messaged me just around here, and he said, oh, it's kind of stalling out. And I said, yeah, just wait. Just look for the backfill and see where the bid is, and then they'll take 7,000 again, and that's exactly what they did. So this is hard to trade. Okay. So for retail traders, when you have small candles, you got bad trading, right? Like it's just choppiness, and that's bad trading. The bigger the candle, the more follow through you get, right? But when it's doing this, that's wholesale business. This is wholesale business. Right. So as a retail trader, one of the only things you can control is risk management and when to do business. Okay. The overnight point of control was down here. It was 1,904 contracts down here, and it was down here for the longest time. They finally moved it up to 69.90 and 3/4. How do short sellers hold a market up? That's a great question. So, do you know what a short sale is? So when you take a trade, there are two parts to a trade, right? There's the opening of the business transaction and the closing of it. So when you buy something and then to take profit, you have to sell it, right? When you short, you sell something that you don't own. What's the second part of that business transaction, Archimedes? So what does a short seller have to do to close his transaction? This is a buy it back. So what is a short seller? He's already sold. A short seller is a future buyer. You sell something at 5 and it goes to 7, and you add at 7 and it goes to 9, now you're in trouble, right? So you have to buy it back. That buying back creates a buy order, which is support. Get it? A short seller is a guaranteed buyer. They have to buy it back. Does that make sense now? Those are simple business mechanics. You know what, Vox? I do not know. Let me ask Steve. I think he usually runs the trading for the room. It's usually, I don't think he drops the price under 19 bucks. It's usually 29. Sometimes he gives people $10 off. So I doubt it's for both. So as you can see, right, the lows are getting higher. This is not something I want to short. I don't like buying the top of a market, so I'm going to sit and wait for the market to open and wait for a seller to show up if I was trading today. I have not traded today at all. I have not been feeling well for the last 2 days, so I have not traded the last 2 days at all. So I'll call out some trades over the next half hour, and yeah, kind of. Excuse me. Oh yeah, let's go look at silver. We got 6 minutes, right, before the market opens. Let's go take a look. There we go. Getting a little backfilling in silver. Yeah. Hang on. I'll get Steve to come on and let you guys know. So yeah, there's silver. We came close to that 84.90, and we're getting a little bit of selling, but there are gaps. We've got some gaps up. Those are short positions. So we should be finding some support just here at 76. Now, I don't trade silver, so I don't know how thick this market is in the ETF. I know at nighttime the silver futures are very thin, very thin. So scary thin. Gold too above 416.86. I would, I don't know. I'm not a big short seller. After 2005, when they changed the short selling rules, it's a big overnight move, and once again, it's a sneaky short squeeze, right? Um, and this is what I was warning people about. Remember, folks, if you're position short and you're kind of loading the boat on position shorting, remember you are shorting all-time highs, right? So when you're shorting all-time highs, you really have to have a lot of capital and a lot of stamina. It's not the smartest thing to be doing. Just saying, right? I mean, it's your money. You can do whatever you want with it. But remember, there's smart money and dumb money. And what we try and do in our trading room is we try and educate you so you become smart money, right? So inventory is gap long. You sold yours to your brother? That's always good. Keep it in the family, right, Dave? That's good. It's always good. That's always good. Yeah, let's see. 2 minutes to the open. It's going to be interesting. Okay. If this thing does start coming back down, your first bids are going to be 7,002. Why is that? Because when this half-hour bar took the top of that half-hour bar, anyone who was short using that as a stop, right? The larger traders don't use physical stops, so there should be buy orders here. Look for that on the open. Okay? There should hopefully be some selling. Quote unquote should. We shall see. Eight times cost basis is 7,016. All right. If you're unsure what to do, let the market open. Just sit and watch it. If you don't have a trading setup that fits exactly what's going on, don't worry. Right? It's a long trading day. There will be opportunity. They're just running all the stops now. This could be a gap and trap, so be careful of that. That's why I don't like buying highs. We've taken every stop that I outlined there. The next ones are up here. There we go. Looks like there's a seller at 70.10. We've only been open for 15 seconds though. Now the market's going to go down and find the largest buy order. So if you're short, remember I said seller at 70.10. If you're short, put some bids in here in the fours. Right? There are going to be some buy orders here. Right here. There they are. Told you. If you learn market structure, it'll change your life because you'll know where the buyers are likely to be. And if those buyers aren't there at 7,003, it means they see size on the offer and they're going to come down and drop their bids down to 7,000. Watch. Look at the response. I told you. Does it hold? I don't know, but if I was short 8, I'd cover 3 and take my 5 points. Right? Very simple. Right? I drew a straight line. You don't need a DOM, you don't need footprint, you don't need book nose, you don't need any of that crap. All you need is a little understanding of how the business works and a little common sense. So I said there was a seller at 10, so if you shorted 8, your stop would have been 10, and you would have been looking to cover at 3 or 4. There you go. There you go. Nice trade, Lear. Now let's see what the next order of business is. So we found the bid at 3. And if we had broken 3 hard, that means you know that there's a big sell order. The fact that we stopped where I said we were going to stop means that there's not that much selling. There's not that much size. You guys get that? Make sense? Cool. Now, you would have had to have been fast to do it because it was like a 2-minute trade, maybe a minute and a half. Let's see if we can break it now, right? The more people we trap long over 5, 6, and 7, the more selling pressure we'll create. But if we start moving up to 7, 8, 9, those people will be happy, right? So we have a bit of what we call a rotation between 4 and 8 right now. So the sellers are at 8. Let's see if they lift. If they get above that A high, the shorts who are short are going to start buying back, right? If we start moving up over 70.10, that'll force the shorts to scramble. Just like when a linebacker goes into the pocket and forces the quarterback out. Force the scramble. But the seller's still there. Remember, I said there was a seller at 10. They're still there. Now, I was just going to say I'm short biased, and then I saw that bid at 4. uh, Beautiful distribution here. You could pretend the shorts are kind of, holding, like when you stand on your friend's shoulders to jump over a fence. That's what's going on at 7,003. Yeah, it was just Tuesday that we were up here, eh? Oh, alrighty. This is a rotation, right? So what the market makers are doing is they're buying under 6 down to 4, then they're selling from 6 up to 8. This is two-sided trading right here. I am short biased, right? Just because overnight inventory is so long and, you know, but the more people that we have trapped short, the harder it is to push it down. That's why people go, well, why won't this market go lower? I'm like, well, stop shorting it. Exactly. Two-sided trading at the highs is distribution. Beautiful. That's absolutely beautiful. Come on, let's take this. I want to see what they got in the tickle trunk under 7,003. What's under here? All right. Let's see. We got quite a few people trapped short under 7,003, don't we? Lordy, lordy. Okay, Lear. That's cool. That seller has now moved down here. Do you see the top of those candles? Here, let me make this a little bigger. Look at the top of these candles. See? You could see exactly where the seller is. Now, if it lifts over that, it means the sellers have seen buyers. Right? So we're just in a little distribution rotation right here, right? Right here. Should break. We should break that level soon. Psych. There we go. It took a while, right? It took 8 minutes. Now, if we get accepted under 7,001 and 7,000, you'll be looking for 97. They will sell as much as they can, as long as they can, as long as the order flow permits, right? If the customers are there and they're willing to pay more, don't put it on sale until they start saying no. Okay? Very simple. Great question. So for me, because I scalp, right? For me, acceptance is 30 seconds is the minimum I need to get my business done when I'm on my game. The official definition of acceptance in market profile is 2 half-hour periods. For me, acceptance is how long does it take you to handle your business. So if, for example, you were shorting 6 and it goes down for a minute or two down to 7,000, that's enough for me before it pops back up. So if I go long here and it goes here, I'm out. And if that's a minute or two, that's all I need. All I need is 30 seconds to 60 seconds to get a trade done. But that's me. So it depends for you, Slippy. How long does it take for you to execute your business plan? Acceptance is all, there's a standard definition for it, right? But it really, the practical definition of acceptance is how long do you need to execute your business plan? What's up, Jam? How you doing? Bids at 7,000, my friends. Bids at 7,000. I am not on the micro, but here, I never trade the micro chart. I'll trade the micro using the ES chart. Yeah, bids at 7,000. So say you went long 7,001, I'd be out at 7,006. So I need 90 seconds. For me, 90 seconds is acceptance. Right? See, like Kenneth just took those 2 contracts. Beautiful. Now remember, this market is in the hands of speculators. So I have no idea whether 7,000 will hold. Let's just draw a line there and see if it does. I expect it to get tested. I don't think it's going to hold. Right? The longer you spend under 7,004, right? We have sellers at 4. We went all the way up to 7. Now the seller moved down to 4. The longer you stay at a level like this, right? Nice work, Smug. 5 points, 4 contracts. It's a beautiful thing. Have a good day. Now, if we don't take out 7,000, I'm wrong. Right? Just watch the offer. As we come down, When we get to that 7,000, the offer will lift or it'll break through 7,000 and offer lower. Watch. There, it's offering lower. See? Now we're going to test and see how many buyers are underneath 7,000. So say you were short 7,004, right? Say you shorted 4 or 3 because you saw the seller went from here down to here, now here, right? Put some bids down here and see if you can get a cover because there's going to be some buying at 97 on that stop. Remember we told you about this stop, right? Or do we look below 7,000 and come back up? And if we come back up, you're going to be looking for sellers at 3 again. See? There they were. There they are. Right? You're coughing too? Oh man, this flu is just a bitch, I tell you. Oof, it's just it gets its claws into you. It just won't let go. Holy cow. I thought I evaded it after New Year's because everybody in my building was sick and I was like, "Oh, okay, I'm not getting it." I was all happy and then whammo. They got me. You haven't slept in a week, Leslie? Holy cow, that's right. You've been up on the Globex sessions too. Oh. Yeah. Whoa, hello. Somebody got itchy feet. Look at that. That's a short cover. Leaping lizards. Okay, so the market has now just warned you guys to be careful. Okay? That's why when you're shorting a market at all-time highs, there are going to be people come in to cover. Just make sure that you don't get too greedy, right? So they just gave you a little love tap here at 7,001 to 6, just to see if you're awake. Now, they're selling into it at 6, 5. Let's see if we hold the 4s. That's just one big order, right? One big order comes in, the order book just parts like the Red Sea. Watch out if we take out the open. And 7,009 3/4. Be careful, okay? That was a very penny stock move right there. Gosh. No, Ed. You cannot impede commerce, Ed. Is distribution at highs technically bullish? It can be, SIG. Because the thing about if you distribute and you hold price steady, it attracts buyers, right? That's what, you know. So that's the problem with this market because it moves up, it goes sideways, it distributes. And people see that as price stability, right? Yeah, Ed, come on, man. You know better. You know there's always got to be one guy that they got to be the sucker, right? All right, let's see if we can hold that 7,000 again. You've been around the block, Ed. You know. You know. See, if you hold, here's my analogy for that. When I was a bouncer, I'd go to work at 9 o'clock. At 10 o'clock, I'd open the club at 9. 10 o'clock, I'd start a lineup. The club was empty. After about an hour, there's like 400 people standing in line to get into an empty nightclub. If you show price stability, people will line up. Right? Price stability attracts buyers. That's what my poker playing buddies would always say. I never played poker, but they were like, if you don't know who the sucker is at the table, guess what? It's you. All right, let's see if we can get up past the open now. Yeah, if you, I mean, I've been running deals for 34 years, and after a sell-off, if you could take a stock back up and hold it steady, they'll come back in, right? It's just like Field of Dreams. Build it, they will come, right? Build it, they will come. If you build a nice chart, people will come, right? That's just commerce. You know, you're using human psychology. Oh, okay, 10 minutes here. Oh, goodness. All right. Big red candle. Got some decent orders. Yeah, the big candles do. There we go. Looking for bids at 97. Don't be annoyed, Ed. It's commerce. Why should you be annoyed? Don't take it personally. It's just business. Exactly. Never saw a bid I didn't like. There's 97. There we go. So it took us, holy crap, it took us 22 minutes to finally get under 7,000. It was good distribution, right? Next stop we're looking for is 92 and 3/4, 92 half. So we took that stop. The overnight point of control is down here. So now we're going to just gently float down into this area. What I'd love to see is what's it going to do when it comes down to this short position, right? So my friends, this is what you call a gap and trap, right? You gap a market up, you distribute a whole bunch of volume because all the lemmings come in, right? And then when you run out of buying, you just keep selling it down. Their cost basis is here. So when you have a product, you sell it down to where you bought it, stop selling, and take it back up again, right? That's how you make a market. right? Goodness, goodness. All right, we've got VWAP at 69.90 and change. So there should be a little short covering before VWAP. If we get underneath VWAP, you'll be looking for 84 as your next target down. It's a very simple process, Dave. But being able to identify that process on a chart when it's happening in real time takes a little while. So there's the front run of VWAP. Now let's see where these pendeos sell into it. Right? Let's see where they sell into it now. They're going to sell into it somewhere in here, here, or here. All right? Because you let it breathe and then you sell into it. I know, Ed. Get used to it. It's going to get worse. I think it's going to be quite a volatile year this year. Price exploration is often violent. You know, and remember, I've been saying, I told you guys, not to say I told you so, but I told you so. I've been telling you guys now for a month that after Christmas, the market is going to be in the hands of speculators. And speculators, they don't take prisoners. It's not that simple, Jiraj. Not that simple. If 7,000 was support and it breaks, you look for it to become resistance. What's the next part of your question? You're there. You just keep going. Keep going. Go to the next. Go to the next. If the beep supports, if the order flow supports. No, if the order flow supports. So if you break 7,000, it could be a temporary sale like we just got now. So is 7,000 resistance right now? It's not, is it? Because the order flow doesn't support it. Why? Because when we put it under 7,000, just like when you and your pop put something on sale, it brings in buyers. There you go. Right? So it's never unfortunately it's never a black and white rule. You know, it's never that simple. It's only if the order flow supports the premise. And that's the hard part in trading. Because it's never so simple that it's always the same, right? And that's what gets people, right? Excuse me. Ugh. So you're there, you just got to finish the sentence. Okay. So we put it on sale. As soon as we put it on sale, we put it on sale under 7,000 for 2.5 minutes. You have to wait for the order flow. Trading gaps is not exactly the easiest trade in the world, right? When a market gaps up or gaps down, those are a bit more sophisticated, complicated trades, right? That's why I encourage you guys to always trade rotational, bracketed, balanced markets. You know where the top is, you know where the bottom is, so your playground has a fence around it, so you can't get into too much trouble, right? Yeah, it's a tight range. I mean, the only people who are buying this now are the people who are short, right? And price chasers, like tire biters, right? Those are the only people who are buying it, right? No, it's not a guesstimate at all. It has to do with the business, Sig. So, Sig, have you ever worked in a store? Have you ever, have you ever gone to a store? Right? The store is a distributor. They have an inventory. So let's say you go and buy cigarettes because your name is Sig. Well, the store paid a certain amount for those cigarettes. They're selling them to you at a profit, right? So they accumulated that inventory from their wholesaler at a price, and then they're retailing them out to you. So accumulation is at the lows, distribution is higher for profit. Get it? Because it's a market. So you accumulate, distribute. Accumulate, distribute. Sometimes you got to put it on sale under the price you bought it. That's just business, right? That's why people have, oh, look, we're having a blowout sale. Everything must go. We will not be undersold, right? It's just business. The chart you folks are watching is just a sales chart. It just tells you, right? It tells you, oh, we have an accumulation of inventory here, and we're selling it above. So when we put it on sale, we bring it right back down to where this is the accumulated inventory or the cost basis, right? Yeah, it'll take some time to digest because it's really simple and you're probably trying to look at something very complex. But maybe go, I always say for traders, if I had a physical, like I do mentorship, but if I wish I could do a physical mentorship where I take you guys and put you in a stall selling fruit in the middle of the city and put other people around you and you'd have to compete with them to sell shit. And you'd get a pretty quick idea of what a market is, right? The chart is just a sales chart. That's all it is. That's all it is. And with that, my friends, I am going to leave you. Sorry, I'm going half an hour late early. I'm starting to lose my voice, and I feel a coughing fit. Have a wonderful trading day. Come see us. We have a long weekend. I am going to sleep this weekend. I'm going to be hopefully back to normal on Tuesday. But I'll be here tomorrow, 7 o'clock in the morning, 7:30 in the morning UK time, 2:30 a.m. for all my insomniacs, and then 9 o'clock in the morning. Thanks, everyone. We will see you tomorrow. Please trade safe out there. Thank you. Bye for now.